Well. What's up, everybody? You're watching the Stock Market Brief Show. My name is Michael Silva. It is month's end. It is the week beginning. Welcome to the show. If you're new here, we use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Friday, I did my month end and weekly recap because I wasn't planning on putting out a video today, but given the context of the market, I figured I'd just hop on here. So let's just go ahead and hop into today's show. Alrighty, everybody, welcome back to the dashboard. Let's just go ahead and look at the 11 sectors that make up the S&P 500 real quick. Consumer discretionary led the way. What helped that out the most? I wonder. Tesla, one of the top performing stocks in the S&P 100 today. And then we have technology as the second performing top leading sector of the day. We had stocks like Nvidia way up. We had also Netflix significantly up on the day too, trying to counterbalance this recent pretty dramatic sell-off into the new year. If you take a look at year-to-date performance or month-to-date performance, or actually month-end performance, I should say, for the 11 sectors, financials did creep itself up into the positive territory for close, and then we have the other one in the green, which is a standout amongst them all, up almost 19% for the month of January. That right there is energy. Down towards the bottom, consumer discretionary, real estate, and healthcare. All right, let's continue on really quick. So first and foremost, I just want to quickly show the chart of the dollar, and just this honestly feels like the VIX to me. Like this is also something that you can look at, the Dixie or the UUP, right? Or depending on what platform you use. The UUP, just look at the move down in the dollar today. Now the reason why I'm showing the UUP, it's just a fund that you can trade versus the dollar sign USD. Right, I usually show that chart. The reason why, because it takes a little bit longer to update, and I just want to get this video out. But just take a look here really quick on this big down day on UUP, and you can just see the exact opposite take place, right? So when this comes down, we see typically, certain commodities start to perform really well, like gold, silver sometimes. And then also, when you see this come off or go up, it's like the perfect inverse correlation of the S&P 500 as it stands right now. This big move up, S&P 500 came down. So we're starting to breathe a little bit in the dollar. S&P 500 is starting to rip up right here. Just an interesting correlation to continue to watch. Now, people are going to be like, oh, should I buy into this? Should I buy? We'll get into those charts here momentarily. Here is a risk factor going into the remainder of the week, right? This is just a 15-minute chart of the VIX, right? The sentiment indicator, the measure of fear in the market, I guess you can say. We have a positive divergence taking place with a low, a lower low, a low, and a higher low right there. And then we're also kind of flagging right here. You can see a downsloping trend line, and you can see we had area of resistance. We gap right through it, area of support, and now we're right back at that level. So always think of the possibility. I don't know if we're going to gap up tomorrow in the markets, and this is going to gap down into maybe 23, 24 range right there. But it's just something to keep an eye on. If we do start to come back up, this is holding as resistance. And if we start busting out of there, well, perhaps we start seeing the market kind of, let its foot off the gas here a little bit because, keep in mind, volatility is still here. It's not gone anywhere. And I'll show you that on the daily charts. But let's first look at monthly charts. So I just wanted to really quickly call out that they did happen to bid back pretty significantly for the month end. And what I wanted to call out here is the 5 EMA did still hold there as resistance. So the Bulls were not able to take back control, but they did a very good job. We were down 7%, on Friday, and then just, one last day of the trading month, we're now down 5.26 to start the month. Still a horrendous start to January 2022, if I do say so myself, but not as bad there. S&P is not as bad nearly as the NASDAQ 100, down 8.52%, but it's still coming off of a low from, a significant level. And, that's at least a decent sign, but you can just see the monthly candle does not look good, well below that monthly 5 EMA, and we have that, crossover that took place right there. You can see here on the S&P 500 chart, we still haven't fully crossed over, but that will be something to watch because if we do cross over, just understand that it is a bearish signal, right? It's a bearish crossover. And then if you're trading from the long perspective, you do have a little bit of wind at your face. You want to see these spread and trend like that. That'd be the more bullish case. But as it stands right now, we're putting in a higher high, and this is just going flat. So it's a divergence we've been talking about for quite some time. Same thing goes with the RSI right up there. So let's just hop into Dow Jones Industrial Average. They managed to bounce back into that 5-period EMA. So, congratulations, industrials, but keep an eye on that PPO still right there. That is still the risk factor, negative divergence, down 3.32% on the month. The IWM managed to come off the lows quite a bit there. We're down still almost 10% for the month. Pretty horrendous month. We did have that bearish crossover. We've been seeing some big volume on the break of this channel. So we're getting a counter trend bounce, which we've been preparing for. Why? Well, we got to respect our signal charts, and our signal charts tell us a lot, which we'll get into momentarily. Let's look at the daily charts, starting off with the SPY. So first and foremost, I just want to remind you that the options market priced this in already, right? It let us know its risk range, and it let us know that there was going to be volatility. Now, when I say volatility, some people might say, well, it didn't go down, it went up. Volatility can go up and it can go down. Hence is why I took that QQQ long trade going into Friday close. So now we're still within the risk range, so nothing crazy is going on. So as you hear all this, news and all these narratives, the bottom's in, this or that, like the options market it's literally just doing what the options market told us it's going to do. It's going to play within this range. Until it gets outside of a range is when we start to consider a big shift in change in the markets. Like if this were to get way outside of the range, be careful, because then we might even have even more of a stronger squeeze to the upside. And the same goes to the downside. If we get way beneath the lower range, we can also see significant more selling take place as dynamic hedging takes place with various hedge funds and institutions, okay, the big players. But as it stands right now, where did we close? Right at 450. Where's 450? That was an important level last week, and we're right back there. The important level this week is going to be just above 455. So yeah, can price reach up there? I mean, it sure looks like it's going to, right? Nothing's certain, but it sure looks like with a close pretty much at the high of the day, it looks like we can reach up to these levels. So as a trader, you need to understand where price came from. Okay, so if you miss this move, and now you're like, okay, now I'll just jump into it, and you're jumping into it up here, which there will be people that do that. Understand you're taking the risk that you're taking is not worth the reward to the upside. Yes, can it go higher and come up here? I mean, if that's what you want to play, but understand that can also come right back down to the lower range too, or even in the middle of the range, and then you're starting basically, in the hole with whatever trade that you may be taking. Okay, so yes, very strong day in the markets overall. The Qs up 3.2%. Holy cow. That was a very strong move in the Qs. Where did we come up to? Just about the upper range, which is about 365. Have we tagged the 200-day moving average? No. If you're wondering what I did with my current position, is I told you on Friday what I was going to do, right? I wanted exposure to the market, so I took a 25% position, right? It's a full-size position, and I said, best believe if it comes up into this area or even this area, I'm going to be dumping some of that exposure. I did, right? So now I only have a third of that position left. I actually got off, I think, around 50% or 30% around here, and I think another 30% around this range. I don't have the exact level on me right at this particular point in time. And then I got to keep a little bit more exposure to the upside as we're coming in to the upper range, right? I don't want a winning trade to turn into a loser, so I'm just trying to be as tactical as possible. And guess what? If it continues to rip up, so what? I can buy it back higher if the trade sets up again. I'll continue to watch it and I'll continue to talk about it. Let's look at the 15-minute charts. Okay, I didn't do this on the last brief, so I want to quickly touch on it here. Already very, very large move out of the gate. So people that are chasing into it understand that yes, overbought can stay overbought for quite some time, but just understand here, we do have slight divergences taking place. We have the PMO also starting to curl over. This is going to look like all the indice charts. I'll show you here momentarily. And keep in mind, volatility is still high. So can we reach up higher to those levels that we already discussed? Absolutely, we can reach up higher to those levels. Understand there's a point of contact right here, this volume shelf profile, right? So right around 456. And if we take that and we just look at what the SPY gave us, where is that? About 456. Hello. All right. So if we come up to those ranges, is that the best area to go long into? From a risk to reward standpoint, my opinion is no. I wouldn't want to take a long trade there. I would be looking to exit out of a position or peel profits out of that range. Okay. If we take a look at the Qs, also very similar situation, right? We had a low, a higher low, and then we just ripped right out of the gates, right? Pretty much all day just completely went up. You can see PMO is kind of curling itself over and a little bit of a negative divergence taking place there in the RSI. So a lot of strength. These are called follow-through days. Now, previous videos I said, don't buy the dip until this happens. What was I stating? I was talking about on the shorter time frames, look at the 5-day moving average. We need to see it go flat to neutral to start to trending up. Now understand where price came from. It's all the way back up here. All right, so a better case scenario is, yeah, if it keeps on going, but I would still like to see it peel back and start to consolidate. I don't like chasing large moves. I like selling into large moves. And then I like to start looking for other setups. So right now, it's a very, very difficult time to be like, yeah, I'm going long right here. Yeah, I'm going short right here, right? Why would you short into all this strength? You know, you need to wait for the setup. And the setup has came, the setup is gone, and now we need to just be patient for those other levels to be triggered. Let's take a look at the IWM. Big move in the last 15 minutes right there. Negative divergence, obviously very strong day, like all the indices, right? But what do we see here? Well, we're back above the 5-day moving average. It's starting to flatten out to go to neutral. That's a positive sign. Volatility is still packed in these markets, so don't be surprised if it goes up higher and we still come all the way back down to 188. It's so possible in this environment, so don't rule it out. Okay, so obviously, when I'm saying this is not to scare you, but it's to make sure that you're managing risk, right? If you entered in this move right here, okay, right? So say if you play that breakout, boom, you're like, oh, I'm doing good. Now this is going back. It's going back to all-time highs, and then are you just gonna let the trade if I'm right about the volatility being here? Well, volatility is here, and it comes all the way back to 188. Are you gonna sell right there? While other people be like, that I'm gonna go ahead and play a bounce from this level. All right, so that's what I mean about just don't let trades get out of hand. So yeah, overall positive developments. Like I said, we're seeing some strength, nice follow through day. Look for price to get above 203 to 204, but just keep in mind where price came from. So if it's straight move into it, I'm not gonna go long on a breakout, right? I'd like to see it consolidate and hold and see this start to curl up slowly like that. That's my personality type, a personality trading type, trading personality type, whatever. Dow Jones Industrial Average very quickly on the 15-minute time frame. Like I said, very similar to all the other charts, right? We did crack this 348 level, back tested, started moving higher. Pretty good look overall. Volume shelf profile right over here at around 353 to 354. Look at that to be a possible area of resistance. 5-day moving average is starting to curl back up too, so that's very positive. Maybe we can play some pullbacks to the 5-day moving average. Just be cautious. Wait for price to come to you, or wait for price to set up and give you a good quality risk to reward. Let's look at some signal charts. First and foremost, what is a signal chart? Signal charts give us a good idea it's like a technical indicator, but it's for a market. So a market of stocks, right? It gives us a good idea to maybe think, oh, the market might be overextended. It might not be. And it gives us warning signs, right? We can look at, positive divergences, negative divergence, overextensions, etc. The reason why I'm showing the advanced decline line here is because still at this point, we found support, right? On the New York Stock Exchange, the NYA, boom, 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 active support. This already broke down and we're coming back up right here, okay? So still, this could be an early indicator that there is still more downside that we need to be just prepared for. If we look at the advanced decline line in this form, I just wanted to call out, we're getting an above 2250 reading. And if you just look to the left of the chart, that's a pretty overextended reading. Obviously, we had a very strong day, but these will typically come down from those levels. It doesn't stay up there long. Does that mean we're going to pull back? Maybe, but it also means that we could just have an inside trading day, or maybe potentially create some sort of shooting star type candle. Nothing's certain, but the advanced decline line right here on this chart, it's getting a little frothy. Okay, BP chart, BP NDX. Positive divergence, we've been talking about that. We've been talking about the market overextended. I'm not going to beat that drum much longer, but I want to call out, look at today's move on the RSI and also the BP chart. Vertical move as the market went vertical. It's not going to take much longer to get this back into overextended territory, and that is a signal that I'm watching for to potentially let off the gas on some tech stocks, the NASDAQ 100, the Qs, etc. But also, just like we can find positive divergences, if this keeps going up, you can potentially look for negative divergences too, as well, to form as another market signal. So just a very strong move. We haven't recovered much at all in the NASDAQ 100, but yet we're already almost into that oversold territory as it stands, overbought territory as it stands, right? Now keep in mind, overbought can stay overbought for a long time. Yeah. Okay. But we'll follow it day by day. BP SPX chart also, bullish divergence playing out, right? We were talking about this. It finally came. Strong move. Now it's moving up, still below that 50 marker. Not always that great, but it still has room to run. That's for sure. Okay, so we'll keep an eye on it. We'll see if it can keep on perpetuating itself to the upside. Now, this chart I haven't showed for a while. This is SPIP, which is tips over Treasury bonds. All right, now for some weird reason, if you apply a 10-period rate of change, all right, and if it gets up, the rate of change gets up to around 1.3 to 1.5. For some reason, it's been giving us an early indication that volatility was going to be right around the corner. Now, it's not like some historic indicator that I found online. This is just something that I just randomly kind of ran into, and I was like, oh, that's interesting. And I've been tracking it, right? So the last time I talked about it was when it hit these 2 times right up here. And look at volatility. Kaboom, kaboom, right? So it gave us that heads up warning, but it wasn't just this time. And the reason why I did it, if you look back at the 1, 2, 3, 4, 5, it's like 5, 6, 7 times on the trigger point where it basically warns that there's going to be a spike of some sort in volatility. And sure enough, we've been getting those spikes. Why am I calling this out now? Well, we're starting to move up a little bit higher right here, which could say, okay, yeah, volatility moved up. We're kind of backing off a little bit right now. Perhaps if we get back up into this range, that's going to give us an early indication that we might see some volatility around the corner again, giving us that early indication. So I'll continue to watch this and show you guys when it pops up. A couple things I want to call out here, okay? Now I just want to look at relative strength of the FANGMAN stocks. FANGMAN, meaning Facebook, Apple, Nvidia, Google, Microsoft, Amazon, and Netflix. Most importantly that I want to call out here is they've been getting beaten down already year to date, right? Apple still remains to be above that 50-period moving average on the relative strength line. So Apple is the strong one, okay? If you're looking at any other one, understand that it's still under the 50 MA and it's still underperforming the SPY, all right? So Nvidia not performing better than the SPY. Google, right? It's still below that 50-period moving average. Microsoft trying to make a comeback, kind of curling itself around there. Was a weak player today overall, right? Google was also a little bit of a weak player. I notified that one to the Discord, and then we started to see a bump towards the end of the day. Amazon still well under it, but starting to curl up, right? Decent performance today out some of these stocks. And then Netflix too, obviously decent performance these last couple of days, but understand that it's still underperforming at a significant basis. So it has a lot of work to do. Now I want to show you this chart specifically. This is right here is the safety trade. We're looking at gold over the SPY, utilities over SPY, consumer staples, TLT, right? Bonds, defense, DEF is the ETF, XLV, so healthcare, all right? The reason why I'm showing you this is because at the start of the year, while FANG stocks, while big tech stocks and ARK stocks and all that stuff was going down relative to the SPY, these started showing some significant signs of strength from a relative standpoint. And now we're starting to see them come off a little bit. However, the majority of them still remain above the 50-period EMA, meaning that they are still outperforming the SPX at this particular time. So this could just simply be, some rotating taking place, some profits taking place, but don't rule out yet that the safety trade is all of a sudden off. I wanted to keep today's video as short as I possibly could. We're coming into the upper ranges, right? So be mindful that we're coming into the upper ranges. The 15-minute charts, they're getting a little frothy, a little overextended. So be cautious of how you enter into these positions in various equities. Make sure that you're setting up yourself for a good risk to reward trade and that you're honoring your stop losses and sticking to a plan and creating a plan, I should say, before hopping into anything, right? The only thing we can control is risk, okay? If that's the only thing that we can control, we can't control how high something goes or how low something goes. Control what you can control, and that is your risk. All right, everybody, have a wonderful night.